Hello and welcome everyone to the Almus YouTube channel. This is our Market Morning series and I am Swaraj, your host, filling in for Shikhar Garg. Now Shikhar is enjoying his time being stuck in Mumbai traffic, so this was quite spontaneous even for me. I have with me our technical expert, Mr. Nikunj Bharakhda, who will be sharing the latest setups being seen in the charts. Now, before we begin, let me take you through some of the updates for the day. In the US, markets took a pause in their downward journey yesterday as some of the tech shares provided support. But the underlying downtrend will persist as the hawkish Fed on rates and hefty balance sheet reduction is something which is being focused on. Now, something interesting to note is that in the current environment, good economic news is seen as bad news, as it cements Powell's belief that economy is strong enough to withstand higher rates. Supporting this, yesterday's jobless claims data came out at 1,66,000, which was well below the 2 lakh expected, but it was also the low seen since 1968. Yields keep the March higher intact, now 10-year breaking higher and 2 years slightly subdued, leading to yield curve steepening again, elevating some of the concerns about the recession in the market. But it is still too early to conclude either way, as we are still in the early stages of monetary tightening. On the currency front, dollar remains well supported and its rally is now broad-based as commodity and EM currencies also struggle under the weight of the rising US yields and expectation of a lower dollar liquidity post the quantitative tightening. Yen had some relief after data showed the current account swinging into surplus after the big deficit last month. In the domestic side, focus is on the monetary policy announcement at 10 a.m. today, with a majority not expecting any change in rates or stance. Expectations abound that RBI will continue to support growth over inflation fight, but with global and domestic price pressures rising, such a stance would be read as RBI being further behind the curve and naturally be a negative for the rupee. However, flows and RBI policy on currency will hold key for upside break. 7620 resistance expected to hold, but it will become vulnerable on the dollar index breaking above 100. Now, Nikunj, we are seeing the dollar index rising on the charts as well. What are you seeing in the charts of USD INR?
Good morning to everyone. Technically speaking, dollar rupee looks like it may hold around 76 level as of now. So if we were to see, since March we have been seeing that dollar rupee has been moving in a downward channel of one standard deviation. So if we were to see the support, it is taking support somewhere around 75.30, 75.25 levels. And on the higher side, as of now, the initial resistance comes at 76, which has been holding since last 2 days. So any short-term exports can be covered around 76 figure levels, and imports can be hedged at 75.60, 75.55 levels. But if we were to see on the longer term charts, dollar rupee is on the upside. Possibly we may see some 76.50, 76.75 levels. But the only thing is it has to close up above 76.15 for 2 consecutive days. This will ensure that now dollar rupee is moving higher. Moving on to euro dollar chart, euro dollar has been bouncing from the low levels, previous low levels, but we have seen in 3 to 4 days we have been seeing that euro dollar has been moving lower and it is trying to break the previous low. Now the only hope for euro dollar to bounce is from 1.08, which was the previous swing low, and if at all it breaks, then possibly we are moving towards 1.05. On the higher side, if at all we get 1.11, that would be the very good level to hedge for exports. Importers can wait for better levels with the stop loss of 1.1130. So that's it for euro and INR. Now Swaraj will continue.
All right, that was very interesting to see the charts. As mentioned earlier, we do have the monetary policy announcement at 10 a.m. today. It's an important factor affecting the rupee. And that's it for today, guys. We will see you all next week. Have a very good weekend.